Hello, everybody. This is Patrick Zielbauer. It is Monday, February 19th at 3:31 p.m. Central Time. Thanks for joining us. It is a half day today, so to speak. It's President's Day, so light volume day. The market was up and down a little bit, but a great day for an event, as someone here said. So let's do some risk stuff, and then we'll just sort of jump right into it. I'll try to do a quick intro for some folks who are newer, because there are some new people here today. Trading futures, options on futures, and retail off-exchange foreign currency transactions, that means Forex, involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time, including mine, by the way. Past performance is not indicative of future results. One thing I want to mention specifically is that because we're starting to have discussions about automated trading, I want to make it clear that when I test and play around with these systems, everything's done in a simulator. None of it is live. And obviously, when you start working on back testing and forward testing and so on, just be aware that system trading has significant limitations when it comes to curve fitting and optimization and so on. And you want to bear that in mind as you go forward. There's a lot of data available online about the limitations of historical data when it comes to system development. So if you want to have a discussion with us about that, we're happy to have that discussion. And also only remember to only fund a futures account with risk capital. That means money you can afford to lose without lengthening your retirement horizon or affecting your ability to pay the bills and so on. If you have any questions about what that means or where you may fall on the risk capital curve, so to speak, please feel free to have a discussion with us about that. Everybody here has a rep, whether you are a client or not. All right, my name is Patrick Zielbauer. For those of you who are unfamiliar, I've been working for Infinity for a long time, almost 14 years. And in that time, Infinity has worked with a lot of different trading platforms and data feeds and chart programs and so on. And most of you know by now that we really have settled on Infinity AT, which is our execution platform. It looks like this. There's no data on it right now because the market is closed. But this is our depth of market screen showing a long one position in the NASDAQ. I'll explain what that is, but there's nothing really here to display at the moment. And then Infinity, or otherwise known as Sierra Charts, which is a charting program that's in the background. Let's bring it to the front. All right, we're going to talk about it. Sierra is a phenomenal charting program. If you used it 5 or 6 years ago and you're hesitant to use it again, use it again. At least test it out. It's an unbelievable product. It gets better every couple of months. Some dramatic update happens. It's 10,000% better than it was, in my opinion, than even a year ago. It's a great application. So we have a simulator. It's free. It's got live data. If you're kicking the tires or want to do that, you can test this out without having to open an account or pay any money or divulge any real personal information. We are happy to try to prove ourselves to you in the 30-day period. The minimum to open an account with our firm is $3,000. So if you like what you see and you want to give it a whirl, you can put a small amount of money in the account, and we will give you also more permanent access to a simulator that you can use on an ongoing basis. And maintaining an account with Infinity, even if you're not active, is very inexpensive. All right, so I'll be happy to share details with you more on a one-on-one basis if you're curious, but the crux of it is this is a great program. Infinity focuses on futures. It's not a side project for us. Our policies, the way we communicate with people, the service we provide is indicative of the fact that we understand the risk of this type of trading and the urgency with which things need to be addressed. And we are also cost conscious. So give us a good look especially if you're trading with a firm who tends to treat futures like a side project like TradeStation or Thinkorswim or something that, some company who's 1,000 times our size and really doesn't focus on this style of trading. You especially would probably be a good fit for us. Okay. All right. This is the schedule for today's event. We're going to do a brief explanation of this color background study, just why we use it, what it is. I'm going to explain briefly a strategy that I like to follow that is sort of an intersection of volume and a traditional indicator or two. I'm going to talk briefly about what I call contextual system development and an example of how that can benefit or cost you something. And that's specific to with what's happened in the last few weeks. And then we're going to try to tie it all together with an example of this trading system based on study. I'll show you how to replay the chart so you can see your study work in real time, and then we'll be done. Okay? Feel free to ask questions. I'll get to as many as I can. There's a lot of people in the room today, despite it being a holiday. I'm actually kind of surprised, so thanks again for coming. And let's just jump into it. So the first thing that I'd like to touch on, as I said here in the schedule, is this: what is this color background based on alert condition study? And the color background based on alert condition study is a study that Sierra makes available to anybody that can turn someone like me, who is not a programmer, into arguably a programmer. And what I mean by that is there are things you can do in this charting program that you would think you'd have to be a programmer to be able to do. That's why I love this program, is that it can be simple for the simpletons like myself who like to keep things pretty clean, and then it could be super complex for, you know, don't take it the wrong way, anybody, the ultra nerds or math people or people who like to load up the screen or tie them all together. It satisfies a very wide range of clients. It's one of the reasons I love this program. So let me just show you very, very briefly a gross oversimplification of the use of the color background study, and then we will go into the example. So this is basically the why. Why do we do this? Well, while I'm bringing this chart up, and I'm not going to explain every step I'm doing here because I want to get to the good stuff, and for those of you who are super, super brand new, we have lots of really clearly labeled and well descripted tutorials on YouTube that are like a minute or two long that will show you how to do some basic stuff. All right, so I'm going to leave you to watch a couple of those or ask us questions more specifically. But for what I'm going to do real quick here is just load up a real basic couple of studies and then illustrate, again, a very, very simple example of why the color background study is useful. So what I'm doing right now is adding a moving average and a volume indicator to the chart, and I'm just going to apply it, and then we're going to see the result there. Okay. All right. Now, what I'm going to do is say I want to be notified by the chart when the market is below its moving average. In this case, I think it's an 8 EMA, and has more volume in the current bar than the prior bar. So again, let's talk through it in English. I want to be alerted by the chart when the market is below the moving average and the volume in the current bar is higher than the volume in the prior bar. So again, a very, very simplified example of why I would do that would be, I believe that the market falls on a higher volume and it has a potential to keep falling. It's already below its 8 EMA. The volume is increasing, so the interest is there. Maybe there's a chance it keeps going. All right, that's again a very, very simple example of why we would add this. So what I'm going to do is add the study called color background based on alert condition, and you can also use color bar based on alert condition if you'd rather have the bar colored itself rather than the background. Same concept. And what I'm going to do then is add these two studies to a condition that combines them together. So the moving average has what we call one subgraph. There's only one line that's part of a moving average. The study ID number is 1. The subgraph number is 1. So we're going to refer to the moving average as ID1.SG1. All right, study number 1, subgraph number 1. So that, and you can either make the note in Notepad. Sometimes I do that. You could write it down on a piece of paper, but you're going to want to be able to keep track of the ID numbers and the subgraph numbers. For volume is study ID number 2. Thankfully, it too only has one subgraph, so volume is going to be ID2.SG1. All right, so what I'm going to do in the color background study is just pick a color. Let's say that we're going to pick this red color, and let's select that. And then in the alert tab, I'm going to do something. I'm going to write this out, and I will explain in a little bit greater detail as we go forward how this comes together. But you'll see based on those ID numbers, it's not that hard. So the first thing is we're going to use the letter C to refer to the current price if we're talking about the current bar, or the closing price if we're talking about a prior bar that's already closed. So the first thing that is part of our condition is the closing price is less than ID1.SG1. That's the moving average. So that's the first part of our condition. Closing price must be below the moving average. The second part of our condition, which we are going to separate with a comma, is when the volume, which is ID2.SG1, is greater than the same study, ID2.SG1, except one bar ago, which is specified with this -1 in brackets. So this, again, first part of the condition, the closing price or current price is less than the moving average. The second part of the condition, the volume is greater than the volume 1 bar ago. So we have two conditions that we need to be true if we want the study to be true. So we're going to put the word "and" in front and put a giant parentheses around the whole thing, push apply, and we get an immediate response. Now obviously, is this a trading system? No, this is not a trading system. This is an example of how you might use such a study. But the general idea here is that you can start to inventory your own indicators, like your own decision-making process. going through this process of forcing the chart to display just the stuff that you want is a great exercise. Why is it a great exercise? Because A, you might realize there's a lot of stuff in your long list of indicators that you actually don't use. You might find, hey, wait a second, I don't even look at that. It's just distracting. All right, you can take it off your screen or hide it. All right, and B, decision fatigue is real. All right, I believe this. I hope a lot of you do believe it by now as well. Decision fatigue is real, especially in trading, and it happens in trading faster, I think, than in lots of other industries. And decision fatigue is the idea that you only have a finite amount of quality decision making you can make throughout the day. And as the rate of information that we as customers and traders and whoever are forced to digest on a daily basis increases exponentially every day or week or year, our ability to process all that data gets weaker and weaker. And in trading, you might be fried by 9:30 in the morning. I know sometimes, I mean, I start early, but I know a lot, but that's true for me sometimes. So it's probably true for a lot of you as well, especially if you're watching all these videos from the trading mentors that you got in your email last night. And then you got, 20 different time frames and all the studies and 13 different markets, and you're watching 3 trading rooms and CNBC in the background. I mean, enough, right? So this is an exercise that you can use to inventory your process and hopefully thin out the amount of visual things that you have on the screen. All right. What you can do once you trust the chart well enough to not display the moving average or the volume, you can actually hide them. So you can hide the volume and you can hide the moving average. There might be very good reasons why it's good to have the moving average study on the chart. If you're looking like at a historical pattern or something like that, yeah, I'm not saying remove everything in a blanket statement. I'm saying that if there's something on there that you really just care more about the condition being true than the color, or excuse me, the shape of the line, for example, then you can hide it off the screen and just keep what's relevant to you on the screen. So I think it's a very useful exercise. This is, in our list of things to cover, this is a brief explanation of the color background based on study. And this is what I would consider the why. This is why we use the study. Okay, it's to simplify the decision-making process, get you to the point where you're actually going to get into the position yourself or through an automated entry a little bit quicker. It's not an attempt to reduce you only to being a red light, green light trader. It's to me, it's just a useful exercise. Okay. Greg asked the question, could you use a percentage increase in the volume rather than just an increase? Sure. So that's a great question, Greg, because a lot of times in Sierra, you will be thinking, okay, how do you have something in English that you know you want to do. How do you put that into play? There are some really neat things you can do inside Sierra that are really actually common sense. And you'll look at the example and you'll be like, oh my God, I should have thought of that. All right, you could do something like this. You could say when the volume of the current bar is greater than the volume of the prior bar times 1.25, like this. So this means that now the current bar volume has to be greater than 1.25 times the volume of the prior bar. Notice when I apply that, some of them go away because this condition is no longer true in some cases. So we're actually going to use a similar math, thing in a minute. Forgive my extremely scientific language, but that's to me a great example of how you can just easily put something in place that you might thought would be complicated. It's actually super easy. All right. Lewis had a question about, could you do this with a custom indicator? As long as the custom indicator has subgraphs, Lewis, they can be referred to this way. So if your custom indicator has like SG1, SG2, SG3, SG4, these all represent pieces of the line, then unless the author of the study has done some like hard coding restricting us from doing anything, which is probably unlikely, then you should be able to use it in these equations. Okay. Gar had asked, can Sierra identify the highest volume bar on the chart? And the answer is not using this condition because this one doesn't look back that far. But in the spreadsheet, there's a spreadsheet ability inside Sierra where you can export every bar's data into a spreadsheet format that exists within Sierra. We're not going to cover that today, but the short answer is yes, you can do that because you can specify how many bars are on the screen and you can ask the chart to test for a max value the same way you would in Excel. You can use the high and low, the open, the close of the current bar. All that stuff can be referred to as well. In fact, Dave, if you missed it, I would encourage you to watch the prior event we did last Monday that covered a similar topic, because we built a strategy that was almost entirely based on high low, of the current bar, high low of the prior bar 2 bars ago, in an effort to detect a certain pattern. So there are hard coded operators like H for high, L for low, O for open, C for current or close, as you saw me use here, that you can use as well. Okay. Subgraphs, Hal, are pieces of studies. So like a moving average has one subgraph, but a MACD might have many subgraphs because it's got a moving average, it's got the MACD line, a zero line, the differential line. So subgraphs are pieces that make up the study. Okay. All right. So, and the price itself, Ken, I'm not sure what you mean by that, but C is the current price or closing price. So on the current bar, that represents, the current price or the current bar. Okay. Alberto, I'm not sure about your question there, but because it's kind of broken into 2 lines, but maybe you can clarify for me. I can come back to that. Okay, now let's talk briefly about this study collection, so to speak, that I'm looking at here, and then I will explain the idea. And then if you want to poke some holes in it, feel free to do it. I already know what they are, I think, but please feel free to comment. So in my time being on this side of the business, obviously I've seen a lot of different strategies and ideas, and I see common threads between my clients who consistently win or lose, or people who I feel have the potential to turn the corner, and so on. And there is really no magic thing here. I mean, I haven't seen one specific strategy that links all my profitable, so to speak, traders together. It just doesn't happen. But I have developed my own opinions over a series of years. And one of the things I like to do is I like to look at a combination of a study that's based on volume traded, as well as a traditional indicator like the commodity channel index. But it doesn't even really have to be the commodity channel index or the CCI. It really could be any oscillator. I've just chosen to use the CCI because a lot of the educating partners that we work with use it, and after watching all their stuff, I've developed a knack for it. So the study here is the study collection you're seeing here is based on the following. Now, there's a lot of stuff on here that I'm going to clean up and hide so we don't have to look at it all. But I will explain first what is all on the chart. So let's look at this. Forget the NASDAQ chart here. We're going to come back to this one. Let's look at this Dow chart because it has no position on it. So we're looking at the chart that's second from the right. All right. What you've got is the main price graph. It's a 5-minute bar. And then you've got some basic stuff like the prior day's low, the current low, the current high, the prior day's high might be up here. Yep, there it is. Okay, those are just basic, daily open, high, low, close study. One is set to look at today, one's set to look at yesterday. You've got a dotted line here that represents the price of crude oil, which a lot of times I hide. I usually keep this up on the screen only when I feel crude and the S&P are directly or inversely correlated, which they don't appear to be right now. So a lot of times I will take this off. The idea with crude being on the chart is that if crude is taking down the stock market, I want to use that to avoid a potential long position that's going to bury me. So there's times where when crude, if you guys remember, and gals, when crude was down below, closer to $40 and it was inching lower, it was really affecting stock prices of energy companies. You could have the greatest long signal in the world and still get rolled over because crude is breaking. So I usually keep the price of crude on here. I don't even really look at it unless I feel it to be directly correlated, which right now it's not. So I have not really been looking at that much, but that's what that line is. Then you've got the value area high, the value area low, and the point of control. So the value area high is this green line that's static that goes backward in time. So what that's doing is showing you the current value area, and then it's just copying that value back in history. The dotted line is what the value area high was at that time. So when the market was right up here, the value area was up here, even though it's up here now. So this is what's called a developing value area. It's a way for the chart to show us where the value area was at the time of, when my signal happened or wherever, based on relative to where the market was. Down here, same thing, value area low. So this is the value area low now. All right, and this dotted line is the value area low based on the developing line. So that's where the value area was at that time. Okay, Gar, these are based on volume profile, not market profile. That's a good question. So what Gar is asking, are these value areas based on trades or time? All right, these are based on trades, volume traded, not how much time the market spent at one specific price or range. Okay. Alberto, going back to your question, no, I don't believe that's possible. Maybe we can touch on that another time, but I don't believe it's not about like what happened one tick ago. No, it's just one bar ago. Although I suppose you could make a chart that had every tick was one bar, but you'd have tons and tons of data. So I'm not sure if that would actually work. Okay, continuing on, we have the CCI down here, and then we have a profile here, which is basically a weekly volume profile. Let me see. Yeah, it's a weekly profile. All right, so not a ton of stuff on the screen. To me, it's enough, but that's what we're looking at. And so here's the idea behind this study. The idea is that when the market breaches a value area high or low, and it does so with a lot of momentum, which drives the CCI up a lot or down a lot, you tend to see a flurry of activity and often a retracement. So, looking back in history, if you scroll back in time and you see some of these red arrows down or green arrows up, these represent hypothetical sell signals, and the blue arrows that we might see, if we go back and we might see a few, represent potential buy signals. Okay, so you'll see blue in the background and then you'll see some arrows. Now, the arrows and the background color are the same study. They're just shown on, what I did was I coded them both for the color background and the color bar, which is what's generating the red arrow. The only reason I did them both is so a customer like you guys might be able to see that you can either do an arrow or a background color. It's just two different ways of displaying the same data. It's redundant, okay? And we'll touch on that here in a minute. But the general idea, again, is that if the market rips through its value area low, and it does so as the CCI is breaching negative 200, our system wants to go long. But it's not, that is also an oversimplification, and this kind of is going to lead into the next part of the discussion. But before I get into that, I would like to say again, just so everybody understands, when the value area to the upside is breached and the CCI registers a positive or greater than 200 value, that is a hypothetical sell signal. All right, if the market is going below its lower value area low, at the same time the CCI is breaching a negative 200 level, that is a potential long. In its very simplest form. All right, that's the idea behind this study. Now, that's number 2 covered. The brief explanation of strategy. It's the intersection of volume and traditional indicators. Volume being the value area high and low. I can't believe I didn't say this, but the value area high and low means 70% of the volume is traded in between these two levels. So it's the intersection of volume and a traditional indicator like the CCI. Okay. Yes, Gar, you can put a profile on the chart, but not in this example because I got to keep moving. Okay, but you certainly can do that. There's a full profile study available in Sierra. It's a phenomenal part of their program. Okay. All right. Now, the next thing that I want to talk about briefly here is what I call contextual system development. Okay, contextual system development, an example of a cost benefit of how this can help or hurt you. So when I say contextual, what I mean is there are situations where, and I'm not even saying this only with the benefit of hindsight, there are situations where anybody could look at the market ripping through this low area and looking at it, watching this happen on all 4 of these indexes at the same time and say, you want me to go long here? Are you nuts? Okay, yes, there are perfectly good examples of areas where, or circumstances where you should avoid taking the trade. Another example would be like that crude oil thing I mentioned. If crude has been sensitive and the market has been sensitive to the price of crude and it's registering a long signal and crude is falling out of bed, that's a good reason to not take the trade. It's not really something that's easy to program. It's very much about how you have been following crude and its impact on the market. It's hard to program something like that. I think this is one of the reasons why many people struggle with system trading. So you have to look at things in context. You could arguably say that if the market were to hit this value area low and rip through it, and the CCI is triggering negative 200 on all 4 of these indexes on the same time, all at the same time, even though the chart's going to show a blue arrow pointing up and a blue background, you could say that you should be going short there. I mean, it's not one of these indexes is not the outlier. They're all ripping lower. At the same time, they're ripping lower. They're breaking out of their well-established range, and they're doing it with a lot of action, which is why the CCI is reading at an extreme level. So that's an example of like, wow, this is a long signal, but you're actually telling me to go short. Wait, what? That's what I'm getting at, is that this is very contextual and it's hard to program some of this stuff. So you do have to be involved. Okay. Now, what I did in this specific example, and I'm actually going to go over to another chart book that here's what we're going to be looking at, is we're looking at the same NASDAQ chart. All right, the same NASDAQ chart. I took off some of the other stuff. I took off the profile. I took off the crude thing. So I wanted to clean things up just a little bit. All right, this is the same exact system, except there's a big difference. And I think it was your question earlier, Greg, about about increase, like what if you want to look at volume by an increased percentage. Jason, you had a question about, I don't want to take that signal right away. I'd rather take it, at the low plus 3 ticks or something like that. Here's how this might look. So this is a simulated trade that I took earlier today, right down here at 67.66 in a quarter. So the market's coming down, it's coming down, it's coming down. It hits the value area low and breaches it. Okay. And it also hits a negative CCI down here. Okay. But the trade did not trigger immediately. The reason why the trade did not trigger immediately is because instead of that buy signal happening right on that specific price, I wanted it to wait until it was a full 5 points lower than the value area low. So one of my conditions, and actually Dave, you had asked a little bit ago as well, can you refer to things like the high or the low? This, and I'm going to explain this whole condition here in a minute, but this last piece of the condition I just added today, and here what we're seeing is the low is less than, this is the value area low. I'll explain the subgraphs and give you an example here in a minute, -5. So I only want to see when the low of the bar, part of the condition that has to be true for this trade to fire is if the low of the bar actually goes a full 5 points less than the value area low. This is in points, but it could be in ticks. It could be, this is, so this, in the NASDAQ, 5 points is 20 ticks. That seems like a lot, but in the NASDAQ, it's not that much. It can rip right through. 20 ticks can happen in a flash in the NQ. And part of the reason I like to demonstrate on the NASDAQ is because it's been so volatile. So you do have the ability here to tell this system to be a little bit more judicious, is essentially what this is doing. This is saying, okay, you're buying the market as it's falling. That is clearly a counter trend trade, but you don't want to do it right there. You want to wait until it goes a full 5 points worse, which in the case of the NASDAQ is $100. So that'd be $100 on a one lot. So what did I mean when I was saying, an example of cost benefit? All right. So the cost of doing something like this, can anybody guess what that is? The cost of implementing a little bit of an extra filter like this is you may miss the trade. All right. If the market rips through that value area low, but not that much, maybe only by a point or two, and then runs back the other way, you will not have made the trade. You will not have bought the market. You will miss it. The benefit is that if the value area low meant nothing to this market and it just ripped right through it, and you end up getting long a full $100 better than you would if you bought right on that price, you may have saved yourself $100 a contract. So that could manifest itself in the form of a lesser loss or possibly a higher gain. So when I say contextual development, what I was getting at with this system is saying, okay, we've had a lot of volatility. Let's just give this thing a little bit more room. And this is a great way where you could say, oh, how do you actually do that? Like in English, I could say, well, what if I could buy it like 5 points lower instead of right at that price? And boom, that's how you do it. So it's all we're doing is subtracting 5 from the value area, and then we're waiting to get to that price. So this is, to me, an example of how somebody should manage a system. It's being conscious of what's happening out there. There were a lot of times where I was practicing with this system where when the market was rallying before the big collapse we had, I would never take the sell signal on the NASDAQ. Anytime there was a sell signal, I just let it blow right by it. And of course, I missed a lot, but I also got my head, ripped off a lot less in a simulated environment, of course. So, that to me is a good demonstration of of the concept. And so what I would like to do is I'd like to go back to the subgraphs and explain, what each of these pieces are, so we can do some examples of how the signals were, or so excuse me, so we can work backwards off what's already here, and I can show you, how we wrote these codes. And then I'm gonna show you also how to import this into the trading system based on alert condition, and how to do something on your own. So the color background based on study, I use SSIG, obviously stands for sell signal and buy signal. That is really just the color background based on alert condition study that we had already gone over with a name. And you can put your own name in right here. So I just put it under short name, I put SSIG. That way when I'm looking at this list, I can tell really quickly which one is which. Okay, otherwise they just say color background based on alert condition. So SSIG, and if we go to the subgraphs tab, the alerts tab, we can see this somewhat obnoxious formula. So a lot of times when people see this, their eyes just glaze right over. All right, it's like, oh God, forget it. This is over. But it doesn't have to be like that. If you look at each of these as a specific piece, and you write them down code by code, and then combine them into one big parentheses, that's really how these things are built. I don't just sit here with my eyes closed typing this code out. So let's go piece by piece for each of the studies. So this first condition, ID1.SG1 is greater than ID1.SG3. All right, so what is ID1.SG1? Well, ID1 is the commodity channel index right here. .SG1 is the CCI itself, and SG3 is line number 2, which line number 2, if you go to settings and inputs, you'll see that line 2 value is 200. That means this line up here. So the first condition that we're looking at in the alert tab is when the CCI is above this value. So that's the first part of this code. All right, ID1.SG1 is greater than ID1.SG3. So that's a fairly easy one to write. Anybody can write that, on their own just by doing a quick example. So if you want to do your own color bar, color background based on study, open up a blank chart, add the color background based on alert condition study, and just put ID1 or add the CCI and do ID1 greater than ID1.SG1 greater than ID1.SG3, and you will see the color, the background will light up because that condition is true quite frequently, depending on what you have this value set to. If it's set to 100, you're going to see it a lot. If it's set to 200, like I have mine, you'll see it a little bit less. All right. Okay, so that's the first condition. The second condition is this one right here. So cross from below and cross from above are two operators you can use in Sierra to indicate I want to know when something is crossing something else. So when you use cross from below, there's two things that are going to be in here separated by a comma. One of them is the first piece, which in this case is the closing price, or C, and then comma ID2.SG2. So now we got to go, let's work backwards and hunt and find out where this came from. All right, so what is ID2.SG2? Well, let's look for ID2. There it is, the volume value area lines. Go to the subgraphs, and we can see here SG2 is the value area high. So far our condition says when the CCI is above line 2, which is the 200 line, and the current price, C, is greater than ID2.SG2. All right, ID2.SG2. All right, so that's the second part of our condition. So we're looking for a cross from below, meaning we want to see the current price trade up through the value area high. So that's how we use this code right here, cross from below, when the current price crosses the value area high from below, meaning it's coming up through the value area high. That's the second part of our condition. And then the third part of our condition should look familiar because we just showed you the opposite for the low side. It's when the high of the bar, the current bar, or the high of the bar that happened in the past is greater than ID 13, so it's the study number 13.SG2 plus 5. So this signal will only be valid if the high of the bar, and just to save us the time, ID 13 is the volume value area line developing right here, this dotted line. So this signal will only be valid if the high of the bar is greater than the volume value area line plus 5 points. You probably wouldn't use 5 points in a lot of other markets. Okay, you wouldn't. You might use 0.25 or 0.75 or zero point 0.6 or whatever, whatever is, like if you wanted to risk 60 extra cents in gold, you would do zero point 0.6, right? Because it ticks in 0.1. So with the NASDAQ, I'm choosing to let this thing get a full 5 points above that level before I'm thinking about going short, because I'm worried that I'm not that precise. So that's how this condition has come to pass. All right, so we've got that condition, and then the buy signal is really just the opposite. It's when the CCI ID1.SG1 is less than ID1.SG4, which is this line down here. So the CCI has got to be below that level. Cross from above as opposed to cross from below. So picture the market ripping down through the value area low. All right, so cross from above. So the market is now coming down through that value area low, and the low of the bar is 5 points less than the developing value area low. So that means we're giving it some extra room to run, which means, again, if the market doesn't go that low, we will not get the buy signal, which might either cost us something in the form of a mistrade. Maybe it'll save us $100. All right, so that is, again, when you look at the indicator in pieces, it doesn't seem as bad as it does if you just look at this for the first time and not know where we're coming from. And again, just like with the other studies, if you really want to clean things up, let's say there's other systems you like to follow or other studies that you like to combine with this, you could hide all these. You really could hide each of these choices like this. All right, we'll leave the color background on there, but a lot of this stuff can be hidden. So the chart might end up looking something like this. It's still showing us all the same data. We're still getting the sell signals. We're just not looking at as much junk. All right, so anytime that condition is true, Chan, and if you're wondering, is this red background occurring here in the background of the chart? That's when that condition is true. So this is a potential sell signal on this bar. All right, so what I'm going to do, Albert, and anybody who's interested, one of the great parts about these studies is that, or these webinars, is that I don't sell indicators, right? I'm not an indicator salesman. All right, I hope I'm doing a decent job of promoting Infinity by doing these events, but this stuff is not for sale. If you want a copy of the chart, just send an email to your rep in our office and we'll send it to you. 100% free. All right, anybody can work off this stuff. Everybody's, it's a great, using the recording of the event and this chart file itself on your computer, there is not a better way in my eyes to really learn how to use this program properly. All right, so you can easily hide and unhide this stuff, and that's kind of where we're at. So that gets us to through this part here, I believe. All right, does anybody have any questions so far, without taking us like on a completely different course about what we've done? Because now I want to tie it together with the trading system here. All right, anybody, am I, are we following along? I mean, hopefully this is, I know this is not like a remedial level concept. It's definitely, an intermediate to advanced level concept, but okay. Okay, all right, good. So one of the cool parts about using the trading system based on study is that you're really just using the same code. So we don't have to redo the code. So a lot of times when I'm practicing with this stuff, I do it using the color background study, and then I just copy the code into a new study that does a trade. That way I'm not worried about sending orders in the wrong place or anything like that. All right, so what you'll see when we right click and go to studies here is you'll see down here I call them auto sell and auto buy, but really they're just two instances of the trading system based on alert condition study. Okay. All right. And so what you can do is you would add the study called trading system based on alert condition, and you would just go for the sell side, you would get your code. So I'd go here like this and copy the code, and you would go to your trading system based on alert condition and just paste it in here. So you've already written it. So you just have to paste it into your trading system based on alert condition study. So once you do that, there are some things that you need to do right away. All right, I'm going to demonstrate what they are. There will be a replay on YouTube as well. David. We'll have it archived on YouTube within a day or so. All right, so the other David asked another relevant question, and he noticed that I don't have a background color on my alert condition. Why? All right, that's because, like you said in your question there, what he's saying is, was that because it happened in real time, but the close of the bar did not meet the criteria? That's exactly correct. So notice that my buy signal never has an arrow or a background color or anything here. That's because the market went lower and then actually closed above its value area. So at the close of the bar, the trade is no longer true, or the condition is no longer true, but it was true for a second. It didn't take very long for the market to get that order in and then for it to be no longer the case that the condition was true. But nonetheless, the trade took place, right? So that's one of those situations where having the fill displayed on the chart is useful. And by the way, if you want to do that, you can go to the trade menu, folks, and choose this option here that says show order fills. And you'll see the fills on the chart itself like this. All right, so does everybody understand why there's no arrow here, or excuse me, no color background? Okay, this was a buy signal that came through. It was valid at the time based on where the market closed. The bar closed rather. It's no longer true, but the trade happened. Okay. All right, so now let's go to the trading system side. So here are the things that you want. Once you put your code in here, there are some things you want to make sure you take care of right away. All right, the first is this enabled option means that this is ready to go. All right, so if you want this to show anything at all, this needs to say yes. I believe it defaults to no for good reason. So if you want your condition to give you a visual result or send a trade, make sure that you have yes turned on here. Number of bars to calculate. Sierra just always defaults this to 2000, just like they do for the color background and color bar based on conditions. I don't really think you have to change that. You could reduce it, I guess, if you want to have a slightly lighter memory footprint, if you don't need that much historical data to make your decision. But that's for you to decide. The order action. So this is our sell entry. So when you're going to pick, okay, what is this actually doing? Well, in the drop down here, you're going to choose, if this is your sell condition, you would do sell entry. Okay. Evaluate on bar close. This means, do you want to wait to send the order until the bar is closed? In the vast majority of your cases, I'm guessing the answer is going to be no, unless you are doing like a moving average crossover on a 60-minute time frame that might trade, once every day or two, where you're not that concerned about missing the entry right away. You probably are going to end up leaving this at no. Most of the day trade, most of you are going to be flat by the end of the day, or close to flat by the end of the day. You're probably going to want to get the signal executed in real time, I'm guessing. All right, this is the most important one right here. Send trade orders to trade service. If you have this set to yes, and you logged in with a live account and the charts come up and you're connected live and this is set to yes, you are sending live trades. So be careful. Make sure that you've got this set to yes only if you want your orders to be live. If you logged into simulated live mode, then it's going to send orders to our simulated live server, in which case you'd still want this to say yes. But remember, whether you're trading live or simulated, folks, should be controlled by how you log into the program, not something you toggle inside the software. Don't make that mistake, because it'll get you one day. You'll accidentally trade in your live account or in your simulator, and it'll be a problem. So only have this checked set to yes if you are prepared to send orders to either the exchange or to your simulated live account with Infinity and Transact. Okay. Okay, maximum position allowed. I set this to 10. Maximum long trades per day, short trades per day, I set them to 100. Obviously, won't take 100 trades, but just make sure that you don't have a number so low that you'll miss something. All right, and then these two choices here, I just leave this set to no. Debugging output, I'm sure that has to do with some logging or something. I don't know exactly. Cancel all working orders on exit, meaning when you get out of a trade, does it do a cancel all? You could probably say yes to that, but I just left that at no because it was a default and I'm not really running into a problem with it. So I'll leave that up to you. All right, so that's our first. This is like how you step-by-step go through the conditions for the sell. In the subgraphs tab, there are still buy and sell choices. So what I recommend you do for the draw style of the buy signal, because it doesn't know what you're trying to do here, it's going to put them both on. Make sure you choose hidden for the buy signal if we're working on our sell condition. The other thing that's kind of counterintuitive that I will ask to be changed is that the draw style for a sell order is actually by default a point on the low, which would be like right here. I like to have the point on the high when I'm talking about a cell signal. So you're going to have to, if you want it to be the same way, you have to change the draw style to point on high instead of point on low. Okay, so usually what I do for the cell signal is I come in here, hide the buy dot because I don't care to see it, and then I change the draw style to point on high, and then you can adjust the size of the dot right here. Okay, all right. And then we're going to go through a similar thing for the buy side. So you would actually go to your buy signal code in your color background, copy the code, go to your trading system based on alert condition, and then copy your new code in here. So here's our buy signal stuff. So similar process, right? Enabled, yes. Order action on alert, this is buy entry. And then all these other things are set to the same thing as my other study. In the subgraphs tab, I've changed the buy to be a point on the low, and then I'm hiding the sell dot. All right, so that's gone. So if we scroll back in time, let's just go find a buy signal real quick. Okay, well, here's a really obvious one. So this was a huge move down in, look at that. Yeah, that was around 7:30 on the second, so that makes sense. This might have been that CPI number or something. Yeah, I'm not sure. I think so. So this is what, well, yeah, I mean, that's not a great example, but yeah, I suppose. See, now we're going to get too far back. I'm not going to end up seeing, yeah, look at all those. That's called me. Oh my gosh, yeah. So when I was running the system, I did like 500 trades in a day and it was all simulated, but I was operating, on like a really short time frame, like 10 seconds or something like that, just to try and break it. Yeah, jobs report. Yeah. All right, well, that's not a great example, but let's see if we can maybe find one on another study chart here. Okay, so here's one, like yeah, this one here. So see that, I haven't shown you this yet, but that's the blue dot. So this is a blue dot that's generating that buy signal. And again, this code is the same as the arrow and the background color, so a lot of redundancy here, but you get the idea. So that's what the point on low is looking like. That's really all I wanted to show you. All right, so now that we've got a chart set up that we kind of like, then what do we do now to go through and replay so we can see how it looked? Okay, I've always been hesitant to teach people how to do a replay on the chart because I have enough clients who are trapped in the simulator and they can never get out because they're so terrified of risking live money. All right, you know who you are, nothing personal, it's just the reality. A lot of people get stuck in the simulator, they get trapped in there for months. It's really, really hard to get them out. And I say that from, obviously I have some interest in my clients trading live, so take it with a grain of salt. But I also am not a jerk, and I want people to trade live when they're ready to trade. But I do realize that there is a significant law of diminishing returns that applies to simulated trading that happens, again, just like the decision fatigue thing, a lot faster than in other industries. Practicing too much in this can be really dangerous because you're not risking anything, and you can't simulate a physiological response to risk no matter how hard you try. I don't care who you are. So the replay thing is even more so because now I'm teaching people how to replay something and they already know what happened. And now they want to trade along with what they already know happened. You don't tell me there's going to be no confirmation bias in there. I don't buy it. So this is the only reason I'm teaching the replay stuff here is because of this. This is a topic that, is a lot more relevant to that than just normal practicing. So here's how you do a replay, but just don't get trapped in this replay mode because it's dangerous. If you already know what happened that day, you can't trade along with a replay and then feel confident that, oh yeah, that's what I would have done. You already knew what happened. So don't fall into that trap, okay? That's all I'm going to say about it. Okay, so what you first do is scroll back in time so that the bar you want to start at is on the far right side of the chart. So I'm scrolling back with the wheel on the mouse like that, like that. So let's do it. Let's start around 8 o'clock or so on the 19th today. All right, so we got a bar that we want to begin around over here. Now you go up to the chart menu and you choose replay chart, and then you go to the replay chart control panel. Okay, so this brings up a window that looks like this. So all charts in chart book, meaning it's going to replay all the charts in the chart book, not the chart you're on right now. And then replay mode, you can, there's a couple other options here. We're not going to test because this is more just for, the average person, but there are other different ways you can backtest in Sierra that are well documented on Sierra's website. So I'm going to defer to that and just do the easiest one for now. And then the speed at which this is going to display is right here. So I'll choose 120, which means we're going to go 120 times the normal speed of a 5-minute bar. So when you push play, you're going to get a couple of warnings. The first is it's going to say, do you want to enable trade simulation mode? And if you say yes, you're going to see the chart like disconnect and reconnect really quickly because it actually puts a wall down between our server and the charts. So you're going to have to come back later and undo that if you want to be able to trade live or even simulated from the charts. So in other words, when you go into a background testing mode like this or a replay mode, make sure that afterwards you go back and undo that trade simulation mode. And I'll show you how to do that. So what you can see what's happening right now is that the market is trading, hypothetically trading. It's going fast because it's 120 times the speed of the normal bar. And you can actually go to the speed thing and increase it. So if I go to 240 here, it's going to go a lot faster, and it can go, you can increase the speed dramatically. So if you recall, the market broke, it shuffled around a little bit. You're going to see those value area lines change as the market goes lower because that value area is moving as more volume accumulates. All right, you can see that happening. So this is the replay mode, sort of in action, right? Okay, so hang on a sec here. Oh, you know what? I missed something really obvious. Okay, we're gonna go, let me show you what I missed. If you want to be able to replay trades, in the trading system section, you have to turn off this option that says send orders to trade service. I apologize, I should have mentioned this earlier. In other words, Sierra wants these two things to agree. If you're using a simulation mode, it can't send an order to a trade service. So you actually have to change this to no. I forgot to mention that a little bit earlier. I apologize. So I'm going to do that now. Send orders to trade service, change that to no. Okay, and then we're going to go back, and do it again. Okay, so let's let that happen again. Let's go even a little bit faster. So you must have that send orders to trade service set to no if you want a trade to actually fire in the replay mode. Okay, so you see that CCI coming down like that. Okay, so let's go a little slower. Okay, so the CCI is coming down. Now we have some choices when you oh, there it is. Okay, I don't know. I'm not sure it fired there for whatever reason. Yeah, I'm not sure why it didn't fire there, but let's try again. Let's try one more time. I'm not sure if I did something wrong there. It might have been I just I use this reverse button, which I don't really usually use. Let's try that one more time. Okay, so there's one thing I wanted to mention too while you're doing this. So you can have other additional trading system based on alert condition studies that can be used to actually exit the position, or you can exit the position manually, or and so this time it actually worked. Okay, so we got into the position here. Theoretically, it's 67.59.50, and then if we let me just slow this down a little bit so it doesn't go too fast. This is now what things would look like in real time, except 30 times the normal speed, of course. You can tell that you can add additional instances of the trading system based on alert condition study to exit trades. So you could say like, okay, if you're here in a position and you choose sell exit, and you've got a whole nother condition for exiting a trade that only will fire if the platform sees you in a long position. So that's one way to do it. I actually have not gone through that just yet. But one easy way also to manage a position automatically is to use the attached trade window like this, and you can actually set targets and stops around your position. So you can put targets and stops in, and you can use this attached orders function to actually send a bracket or a series of brackets or multiple scale outs or a trailing stop or whatever once you get into the trade. So the three ways to manage this position once you get into it are to A, do it yourself on the dome or on the chart. B, create a second trading system based on alert condition study that is dedicated to being an exit, well, whether it's a buy exit or a sell exit. Or C, and which is I believe to be one of the simplest options to do this effectively, is to use the attached trade window, which you can then put targets and stops in and let the trades fire automatically. So in this case, if I wanted to put a stop offset of say 40 ticks, which would be like a 10-point stop or 50 or whatever, you could put that figure in here. And then for the target, let's just say I wanted to do 150, which I know is really big on the NASDAQ, but it's the NASDAQ, and that's just how it is. And so you can put that in, and you can use this attached orders box, which will be checked if you want these to go automatically. You also have the ability to send the orders by position like this. So you can actually send a target and stop based on an existing position, and that's what I just did. So I just right-clicked here and chose this option that says send attached orders by position, and it'll automatically send my stop here at 67.47, and then here's my target at 67.97, and then you can see this little line that I have drawn between these two that is a visual way to link them together. So that's an easy way to let the platform manage the exit for you as well. How does the study know there is a position on? It's tracking it through this area here. So even if you don't have this attached, Dave, it's still looking at this figure. So if you are a long one, it will not take another long position. If you are a long one and you have a sell exit study that is waiting to fire, it will take the sell exit study. All right, so it's looking at this value, 1 at, and then whatever your average long is. Jeff, there is not a way to do a limit order using this study. There is a way to do a limit order with the spreadsheet study. So if you want to take it a step further and use the spreadsheet system for trading, that is possible, but it's not something we're going to cover here today, and it's just a little bit less accessible for most people. Can one use the dome to manage the position? So what Chand is asking is, can I get into the trade and let the dome manage the bracket? Yes. So like if you like to use the dome, like I personally like to use the dome, if you want to use the brackets on the dome instead of the attached orders, do not use them both at the same time. All right, because you might get duplicate brackets if you do that, but you could uncheck this attached orders option and you could use the simple bracket on the dome to manage your position. So once the fill comes through, the dome will see the fill, and and if you have auto check, just like it normally operates, Chan, you can have the dome manage the position for you. So you get the fill, the dome automatically sends the stop loss and target just like you would place the trade yourself. So that certainly is possible to do and easy. And it doesn't require you to know how to do any of this stuff either if you go that route. All right. Alberto, you asked a question earlier about sometimes there's a situation where you get out of a trade and then you get into another trade immediately. The system puts you back in. Usually when you use those cross from above, cross from below conditions, that does not happen because of what the definition of cross from above or below means. You can read about it a little bit more on Sierra's website, but if you're using that function, you shouldn't see two signals inside the same bar. If you're using just like greater than, less than, then you might see signals in the same bar. But if you're using the cross from above, cross from below, I don't believe you'll see two signals in the same bar, like getting in and out of a position, inadvertently. Yeah, and it's not really about how to stop. It's not like a separate command to stop the trading. It's really not that at all. It's the use of a particular operator like cross from below or cross from above and what it inherently means. And the fact that the condition can't possibly be true, even though the second time your condition looks like it's firing, it actually can't fire because of what the definition of cross from above or cross from below means. All right. Yeah, Jason, 100 ways to fine tune something like this, absolutely. And that's why we give the charts away. So anybody who wants a copy of it, please feel free to ask, and Jason's suggesting some ways for me to fine tune this, and there's definitely ways to do that. All right. Then where would Hal asks, where would you get the numbers for the brackets on the dome? That would be controlled from this profit and stop loss field right here, just like a normal simple bracket, Hal. So you would put those figures in here and check auto. And when the charts send an order and get a fill, the dome will reflect the position. Okay, and then the bracket will fire as long as the dome is up and you're connected properly. Tommy, can you add additional lines at different levels on the CCI? Yes, there's actually a separate study, Tommy, called the horizontal line study that you can actually put lines at whatever price and whatever region you want. So you would add the horizontal line study, you would select region 2 in this case, and then there's an infinite number of choices. So you could put them at like 150, 100, 75, etc. And then those two can be referred to as subgraphs. So, even though they're not part of the CCI, the horizontal line study might be ID6, and then, the first line might be subgraph 1. And then you might have ID6 subgraph 2 and ID6 subgraph 3 and so on. So they can be referred to despite the fact that they're just horizontal lines. That's why they added a study version of it. Dustin asks, can you reference multiple time frames for your auto trade? For example, if you're using a 5-minute chart, but you want to add if condition X is true on a 30-minute chart. The answer is yes. And the way that you would do that, there's a really good example of how to use this study properly on our YouTube page. It's called Study Price Overlay. So the first thing you need to do is you need to add, for example, what I would typically do is add the longer time frame to the shorter time frame chart using Study Price Overlay. So as an example, the video example that we have on YouTube, it's been up there for quite some time. It's a great simple example. It talks about adding a 34 period EMA from a 60-minute time frame, I believe, onto a 5-minute chart. So once the overlay occurs, that study is just another study that can be referred to like any other study. So once you complete the overlay using Study Price Overlay from the 60-minute to the 5-minute, on that 5-minute chart, there is just another study that can be referred to just like anything that were natively on that chart itself. So it's definitely doable. All right. Okay. Okay, Alberto, I think it's, I obviously I see all the questions or comments coming through. Maybe we should, deal with that outside of this event. I just can't follow everything you're saying here. Apologize. All right. Yemi, is there a way to set break even on one contract on the dome? No, not really. I mean, you can use, the only way to really do break even on the dome is to use more than one contract because you'd be doing a multi-bracket trade. There's really no way to do a break even option on the dome, although the trading dome is being completely rewritten. For those of you, who may not have heard, there is a massive infrastructure upgrade happening on our side right now. It's all good stuff. Great things coming down the pipeline, including, a rewrite of the program that's going to give us a lot more freedom on, the things we want to do with the dome. So stay tuned because there will be good things happening. It's all good stuff. Yeah, definitely. This is what I'm seeing, just to kind of give you the inside tip, so to speak, is the people behind the scenes on our side right now, while a lot of other companies are skimping and pinching on pennies, so to speak, these guys and gals are really pouring resources into some really neat developments at the clearing level that will give us, some really, it's going to revamp the way we do things in a lot of ways, all positive stuff. So I'm very, very bullish on Infinity and what we offer. Yeah, Hal, we want to make it better. Yep. And yeah, I agree. I mean, this is a little bit deep for a newbie, but I hope that we can demonstrate through events like this the lengths that we are willing to go to to help people get started on on the right foot. And there's a lot of good stuff out there. There's also a lot of nonsense out there. You don't need your broker adding to the negative. We should be the positive. Yeah, Brad, there's trailing stops available on the dome. In fact, while we're here, one thing I'm just going to pull up here because we're talking about it is we have a great YouTube page. I'm proud of the YouTube page because most of the videos are mine, by the way, but we also have organized it pretty well. So if you want to go back and look at some of the prior events. Okay, this little event that we're all doing here today, we're calling it the Sierra Chart Club. Okay, these are all the ones that we did since January 1st. Okay, so that link that I just posted, that'll take you to all the ones. If you watch every one of these, which I don't expect it to, but if you do, you will have a really good handle on how to use this program. I mean, better than most. Okay, if you want a really good primer on just order execution, like just using the dome, then this playlist here that I'm posting next, this is specific to the trading dome. How to place an order, how to do a bracket, how to do a trailing stop, how to do a multi-bracket, that sort of thing. And then for Dustin and some of the other people who are asking me as well, there's another good little list here that we have that talks about the study price overlay study, which is this link. And this is the example I was talking about where a moving average on one time frame onto another time frame, or how to put the NYSE tick onto an ES chart, or how to overlay the volume on the E-mini S&P onto a NASDAQ chart. I mean, there's really a lot of things you can do with the study. It's one of the most powerful studies inside Sierra Chart. Not enough people watch these. Yeah, Chan, the ones on this page are in the correct sequence, right? So this is the first one up here at the top. All right. Okay, so David says, could you stop a sell trade from being sent if you're already in a long trade? So if you are in a long position, I believe it's going to ignore your short trade. It's not going to reverse it. If you use the trading system for, excuse me, there's a study called Spreadsheet System for Trading that is available in Sierra that we haven't really done a webinar on in a while. Maybe we will again soon. It's a little bit more of an advanced function. It does support reversals. So if you want it to support reversals, it can do that. I believe this one will ignore anything if you're already in a position other than a sell exit should you be long. There's a couple videos up there, Hal, about drawing tools like Fibonacci retracements. We call them price retracements. Yeah. TJ or Tim, I believe, right? Yeah, Sierra's free if you do 10 round turns every 30 days. Otherwise, it's $20. So if you have an account here, 10 round turns every 30 days, we waive the fee. All right. Okay. Yeah, our system is going into a maintenance, as it does every day for about 15 minutes here. So I think this is probably where we will leave it. The last video that we did, Dave, is called "Anyone Can Auto Trade: How to Create a Basic Automated Entry in Sierra." That's probably the one you'll want to take a look at based on your questions. You'll probably get some use out of that for sure. All right. The email will automatically be sent by our email client probably within a day or so. All right, if you want to get there faster, just go to this page. I'll post it again here, bookmark it, and it should be up there by the end of the day tomorrow. But the email will probably go out within a day or two. All right, and then one thing I'll mention too before everybody takes off is that I want to try to do a value add like this for people who are Infinity clients or for people who are are on our demo account and are communicating with us. There are a lot of folks, okay, and you know who you are, and it's totally cool for now, but you know, not providing us with your contact info, your name, we're going to start to filter people out. And that's not because we want to badger you. It's we owe it to the people who are willing to communicate with us to provide good content to people who are willing to at least explore the idea of being clients here. And these presentations really, after all, are geared towards our live clients. So we believe it to be only fair. But we do ask that if you attend our events that at least provide us with valid info. And if I call you and you say, hey, Patrick, I appreciate the webinar, but I just have no interest, then we will leave it be. But it's a resource issue for us, and we do appreciate it. If I am to continue going down this road, we have to use our time as efficiently as possible. All right. We do appreciate that. Okay. All right, everybody. I think that's where I will probably leave it for now. Thanks again for coming to the event. I'm going to read some risk stuff. We'll have this up on YouTube within a day or so. Tell your buddies, tell your friends. This is an exclusive club. It's going to get more exclusive for those of you who have not gotten the gist of that yet. So we appreciate you coming and for being a customer. And another thing I'll mention too is that if you guys have, or gals, have like a little small group of traders where you're all doing sort of the same thing and you feel like you could benefit by dealing or doing like a small group session with us or something, we're open to doing that. We do it all the time. So if you've got a Skype group or a little mini trading club or 10 or 15 of you, 5 or 10 of you, it doesn't matter. We'll happily put something together in private for you, and maybe maybe again add some value. So that goes a long way with us. Those types of referrals is how we grow our business. So we do appreciate that again. All right. Okay. Thanks again. Appreciate it. Contact us if you need anything, and we will see you next time. See you next Monday. Okay. Thank you again. Everybody have a great day. Thank you. All right, folks, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Folks, don't forget to ask your representative for a copy of the charts if you want them. They're yours to keep. All right, enjoy. Thank you. Good night.